Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back as always for another daily cryptocurrency market update video. Today we have a lot to get through. We'll start off with the charts, and then we're going to be moving on to the SEC. We know the SEC has launched a tyrannical regime against the crypto space that is not only counterintuitive to the entire industry, but to the United States and its standings as a leader in technology. We're going to be looking at the Biden executive order, which came out, I think, in March 2020, which we looked at when it came out, and how actually some of the orders that were given in that executive order were to ensure the US remain its role as a leader in technology, which the SEC is absolutely not doing. Yesterday, there was a congressional hearing with a member of the SEC where they got a grilling, as always. And actually, we're going to play a clip from this because one thing you'll notice is the incompetency of the SEC doesn't just start and stop with crypto. It's further afield, and actually a update and upgrade of the SEC is very much needed. So that was very interesting, and some interesting things to come out of there. We'll be hearing from the IMF, the International Money Fund, which essentially disagree largely with what Gensler's doing and say that it's not an effective method. And then the former CFTC chair alleges the SEC acted deliberately in timing of the Coinbase lawsuit. Then we'll get into some sort of macro stuff, and we'll wrap things up. It's very interesting because we've got a lot of negative data coming out. It was Europe today. It's likely going to be Britain tomorrow. And we've seen the dollar get quite a bid with this. However, it's going to be very interesting to see how things sort of play out. Certainly with rate hikes, we know the UK, we saw Andrew Bailey come out yesterday and actually say that inflation was due to people getting paid more money and that it was unsustainable. The UK is beyond a joke, not just from the sort of Bank of England central bank point of view, but the government itself. We can maybe discuss that a little bit later. Let's start off, as always, guys, with the charts. This, of course, is Bitcoin, and it's very much following the plan that we've set out for it, really since the start of the year when we got back into the markets. You can see that Bitcoin is ultimately now at that 30K level, and this did not take long. Very interesting, and everybody that watches this channel should be becoming a believer in technical analysis. It is not a 100% guarantee that your technical analysis that you've done is going to play out, but there are the charts hold a far better element of truth than often the media, and we got the BlackRock ETF right around the point of the 25K neckline. 30K was always supposed to be resistance, which it was, coming back to support, and then boom. And we've actually used Microsoft as a real barometer for the stock market and for crypto, and what we think it's going to do in a similar fashion. Inverted head and shoulders across the board. This is very much bottoming structure, ladies and gentlemen. One thing that most people don't do is look at their charts upside down. But if we look at Bitcoin upside down, this was the end of your bull market with your marginally higher, lower low because the chart's inverted, marginally higher high, and then spill. You also had your RSI divergences, which is one reason why we entered the market back in January before we even had the inverse head and shoulders, which is now the structure that we're looking to take us up to 41K plus. Very interesting how altcoins are doing that kind of marginally lower, topping out kind of structure. Ultimately, we do expect altcoins to now play catch up with Bitcoin. If we look at the likes of Chainlink, for example, Chainlink has been in a range for a very long time. You've seen an aggressive buyback, likely coming back into the range and taking it to the upside. This is accumulation taking place here, guys. This is a bull market, and we've been one of the only channels screaming that since January. We also avoided a lot of the bear market in 2022, and now, of course, are back in the markets. If we look at the stock market, it's doing rather well as predicted. We've called the only market we got slightly wrong, or not even, I wouldn't even say wrong, because I think in time it will be a massively right decision, was some altcoins actually went on the back end of the SEC's news and put in new lows. But this is absolutely a bull market, guys. You know, gold's on the precipice of new all-time highs. The bears are exceptionally late in the trend. They have reason to be bearish, but those reasons we assess don't come till later on. The dollar, of course, has caught quite a significant bid today, really on the back end of the European news. You know, if you look at the dollar against the euro, significantly up, dollar against the pound. Yen, the yen, of course, which has been hit pretty damn hard. This may continue to keep rolling. You know, we've got quite a few commodity prices that aren't doing too well. We've looked at inflation. We've covered the macro in pretty much every angle that we possibly could have. This is an exceptionally interesting chart here now, ladies and gentlemen, because this essentially in black is a chart basically of Fed liquidity. And this is the S&P. And you can see they move in tandem. This is a kind of combination of multiple sources of Fed liquidity. And you can see actually market's still very much following. So this is something important to watch. We may do an entire dive on what this chart is and everything about it. But let's move on now, guys. Now that we've covered the charts, we've covered the kind of overview, if you will, of the crypto space, and that's what we try and do in these daily market updates. Not just look at crypto and things happening internally, but look further afield and try and work out where we think this market is going. We absolutely assess and have been very firm on our conviction that this is now a bull market, and there was a fundamental change going into 2023 with crypto that had already taken place in November for the stock market. This was from a congressional hearing yesterday, and essentially the general counsel for Gary Gensler's SEC refused to answer basic questions about the agency's unwillingness to respond appropriately to congressional inquiries. We looked at the major questions doctrine, which essentially dictates that that Congress give a kind of broad scope to enforcement agencies, regulatory agencies. However, there are definitely cases where they overstep the mark, and potentially the major questions doctrine is going to apply to the crypto space. Let's go ahead and play a clip from this.
It was not before the deadline, because during the first conversation between committee staff and your office, which happened to be a week after the deadline, your staff was asking questions, attempting to narrow the scope of the request in order to start a search for the documents. Are you familiar with the briefing the Division of Enforcement provided to the committee?
Yes, I am.
Okay.
We offered that.
All right.
Briefing.
In your professional opinion, do you think a briefing about how the SEC and the Justice Department work together is sufficiently responsive to our request for records and communications?
So I thank you for the question.
You turned it off.
Thank you for the question. I do think that the briefing is responsive, and the reason is that the request looks at and is asking for information about a parallel investigation conducted by our staff at the SEC and the Department of Justice.
Okay, so am I supposed to now send all of our SEC inquiries to the Department of Justice?
Congressman, we have been responsive to your staff with respect to
That's
the
not my question. So if you're telling me that, well, we can't answer anything, but we were slow to start, you seem to acknowledge that. We're now had to kick it over to DOJ. So are you familiar with the production your team made at the briefing on March 15? That's just a yes or no.
Is this the 232 pages of documents that staff
So yes.
produced? Yes,
Yes.
I am.
All right. Do
familiar
you
with
think
that.
it's responsive or productive use of anyone's time to print public complaints and your own enforcement manual and treat it as if it's responsive to our request?
So,
Is that a good use of your very qualified, highly paid staff?
This is insane what the SEC has been doing. They've literally been, so when Congress has had a request, they've literally taken pages from their website that everyone can see in the public domain and just sent it off to them and said, that answers your question. Kind of sounds like, and this isn't just crypto, they talk about climate in just a second, kind of sounds like what they're doing with the cryptocurrency space. We'll talk a little bit more about the SEC and then we'll finish things off with a little bit of macro news.
Because it's not of mine.
Many of the committee's requests, including the FTX requests, are broad and encompass not just internal
So you're stalling now. Let's turn to the February 22 climate-related request. Are you familiar with that request? Yes or no?
Yes,
Yes.
I am.
Okay.
familiar.
The SEC produced 29,000 pages pulled straight from the public comment file. One of your productions even included a letter that I sent to the chair congratulating him on his chairmanship. Are you aware that to date, 80% of the documents in response to our climate request are publicly available? I'll let you answer and then time is up. So you are aware that 80% of it is publicly available?
As our rulemakings are conducted in the public view, they are very
I've had enough of that. Insane, really, isn't it, guys? This is the SEC for you. And if we go over to Biden's mandate, the executive order, Fact sheet, President Biden to sign executive order to ensure responsible development of digital assets. Okay, to protect US customers, investors, and businesses, they failed on that front. The SEC, who are claiming to have jurisdiction over this industry, protect US and global financial stability and mitigate seismic risk. Not really seen that much in that. Mitigate the illicit finance and national security risk posed by the illicit use of digital assets. Very small percentage of digital assets are used in illicit finance, by the way, ladies and gentlemen. It does happen, but actually, if you want illicit finance, go and use dollars, cash, because it's anonymous, right? That is truly anonymous. Me giving somebody a £20 note, nobody's any the wiser. Crypto, we made a video ages ago called Don't, do illicit things with crypto, because most of them are public ledgers. Promote US leadership in technological and economic competitiveness to reinforce the US leadership in the global financial system. Fail. Big. You get an F on that one, I'm afraid. Gensler. Promotes equitable access to safe and affordable financial services. Fail. Support technological advances and ensure responsible development and the use of digital assets. Fail. Explore a US central bank digital currency CBDC, which they've done, but the SEC has nothing to do with that. It is a complete bloody joke, guys, what's going on right now. This is the IMF says banning crypto assets may not be effective in the long run. Absolutely not. This is from the former CFTC chair that is alleging the SEC acted deliberately in timing of the Coinbase lawsuit. Here we go. The SEC appears to have acted deliberately when it brought charges against Coinbase hours before its legal chief officer was going to testify in Congress. Former CFTC chair Chris Giancarlo said on Thursday, he said that from his experience in leading a financial agency, the move seems deliberate. Not to mention all the bloody ETFs we've had come after and so on and so forth. It's just corrupt, guys. I don't know how people can have any kind of faith in regulatory agencies or government themselves, and actually central banks are a whole nother topic. Moving on to a little bit of macro stuff. Are the Fed overdoing it? This is the US M2 money supply, which is literally crashed, ladies and gentlemen. And this is one barometer for liquidity. We've used M1. You'll see stocks are very in line with M1, and so was the stock market with the great print on that happened after March 2020. And when people say, stocks are extremely overvalued in regards to earnings, well, they're kind of almost in line with money supply, but that's for another video. Instead of letting up as the CPI has fallen from 9.1 to 4, or as CPI X lag shelter has fallen from 10.8 to 2.1, the Fed's tightening has been leading the fastest decline in M2 money supply. The 3-month annualized change is now 8.3. So I am not against the bears in regards to, I can see each and every one of you listening. Being stubborn gets you certain places, right? One place where being stubborn doesn't get you is in the kind of critical thinking arena. Because you need to be able to look at both what the bears are saying and what the bulls are saying, find merit in both of them, and be able to work out which one you think has more probability of playing out. That's what we do on this channel, plain and simple. And we can see why people are bearish. We just think that it's not a good enough reason than the reason that we have to be bullish, which we lay out pretty much every day for you. We go into different aspects of it. Everything we do is sound and critically thought of. Buckle up. History says that the US economy could be in for a rough ride ahead. So we do think the US economy is in for a rough ride ahead, but we think there's this period of opportunity for the next 12, potentially 24 months where things are going to go insane. And you're going to see a lot of dollar devaluation. We've looked at sideways rates and what happens to the markets. Talking about sideways rates. So the Fed has gone too far anyway, by the way. They don't need to do that. I don't even think they needed to get to 5.25%. Markets are now pricing in the next meeting, the 2.5%, which is, why would they have not just done that at this one? This is the uncertainty that they've caused to the markets. And the markets are basically going, we don't believe the Fed at this point. We have weakening economic conditions. We have a lower inflation, which was the whole mandate in the first place. We think it's significantly lower than 4%. We're one of the first people to really bring up true inflation. And now everyone's looking at it. The UK, for example, consumers cutting back on food because it's too expensive. This won't end well. Absolutely not. And you had Bailey come out yesterday and say that he's blaming a lot of inflation on wages going up. and it's unsustainable. It's about time wages went up. European business activity slows in June as higher interest rates begin to bite. So we have a weakening. The Fed would be stupid to continue. Europe, I don't think is going to go too much further. Bank of England have got a little bit more wiggle room. But then we've seen the gilts market get smashed, which did quite well today. A lot going on the macro. This is a very interesting chart because this is kind of a barometer of Fed liquidity. And anybody who wants to go and check this chart out, just type this in. Most people don't know how to get this sort of stuff up on TradingView, but they're kind of doing one thing and doing another. So retail's getting hit hard with interest rates, so on and so forth, but they're still largely funding the financial sector, funding the banking sector, so on and so forth. There's $2.3 trillion in the reverse repo market, so on and so forth. A lot going on. There's yings and yangs to everything right now, but ultimately we remain bullish. We've told you all the reasons why. The SEC is full of crap. And this is all going to come to fruition. We're going to see Ripple likely win the lawsuit. Again, anybody who wants to go and see Francis Hunt, the Market Snipers video on his targets for XRP, very much suggest that. Technically, just like we had Bitcoin interacting with 30K and then 25K, and now back up to 30, technicals will follow some sort of fundamental or narrative attached to it. On that note, I'm going to love and leave you. If you've enjoyed the content, as always, a like is appreciated. So is a comment. Please do feel free to check out the Patreon at your own leisure. And yeah, see you all in the next one, guys. Have a fantastic Friday. Thanks for watching. See you in the next.